Hi, I'm Max Keiser. This is On the Edge. Time now to go to Greensboro, North Carolina. Talk with Greg Hunter of USAWatchdog.com. Greg, welcome back to On the Edge.
Good to be here.
All right, Greg Hunter. Europe's debt crisis is coming to a boil. If and when the euro collapses, what impact on the U.S.?
Well, the big impact on the U.S. is that this has been sold as a sovereign debt crisis, and it really is a bank solvency crisis. I mean, that's what the Federal Reserve has opened up these swap lines for. That they're worried about the Federal Reserve System. First and foremost, the banks, as I think there's about 8 Federal Reserve, primary dealers in the European Union. They're worried about those banks. Now, of course, what we saw with MF Global, even if you're a primary dealer, you can still go under and lose a lot of other people's assets. But this is the Fed, the ECB, this is all about propping up the banks. This is all about making the banks whole. They don't care about the people of Greece. They don't care about the people of Spain, Italy. They don't care. They care about the banking system, and they want control.
All right. So, in other words, banks have been buying assets from other banks. They swap bonds with each other, and these bonds they carry on their books for 100 cents on the dollar, but any real plausible resale value would be 2 or 3 cents on the dollar, but they can't allow any of the bonds to be sold because then that would telegraph that the banks are insolvent. So instead, they simply come up with ever more expanding schemes to roll up the debt into mechanisms that are trying to kick the can down the road or extend the maturity date. And you end up with this situation we have today where the central banks, one thing that they will not let happen is they will not let interest rates rise to a market rate. They have their boot firmly on the throat of interest rates. Talk about that a little bit.
Well, they have all these interest rate swaps, and I was talking with Paul Craig Roberts, who is an assistant Treasury Secretary, was an assistant Treasury Secretary, which is a number 2 position at the Treasury in the Reagan administration. He's got a PhD in economics, and he said, if this is all about the interest rate suppression game, and how they're doing it is with interest rate swaps, and the leverage to do this is astronomical. Now, I wrote a piece just based on the comptroller of the currencies. Well, here are the assets of the J.P. Morgan, for example, and here's 70 trillion in derivatives, most of which are interest rate swaps, and I got about a 500 to 1 leverage. I did it with I got about a 40 or 50 to 1 leverage, and I got just on their overall gross assets. And of course, we know that according to FASB in 2009, they can value assets on their books at whatever they think they'll be worth in the future, just like what they did in the European Union. All these sovereign bonds, they can value those assets at, whatever they think they'll get a maturity date, which is crazy. There's no way, like you said, it's a couple of cents on the dollar. But Paul Craig Roberts took a look at it from a point of view from what is their risk capital, not their total assets, what's their risk capital. And with J.P. Morgan, he came up with, almost a 500 to 1 leverage. And with Goldman Sachs, just based on the risk capital, it's more than 2,000 to 1 leverage with interest rate swaps. And that's why this is all so dangerous. And, the banks are teetering on a knife's edge with these derivatives. I mean, if you take a look at the Bank of International Settlements, and you believe them, which a lot of people say it's understated by at least half, that it's 700 trillion in derivatives. A lot of people say it's a quadrillion 4 or 2, 2 quadrillion in derivatives. It's astronomical numbers. I mean, the 700 trillion for the Bank of International Settlements is enough to sink the world. I mean, it's 12, 14 times the world GDP or world economy. And anyway, the long and short of it is that this is gotten out of control, and there's no way to unwind this stuff.
Right. Well, the scenario, the narrative, seems to be driven by the bankers who are in control, who have a good thing going. Every time a bond is due to mature, they create 10 new bonds to make sure that nobody has any liability whatsoever. So they're making out like bandits. The amount of money being pocketed by bankers has never been higher in these countries. The plutocracy is alive and well and doing quite well. Now let's talk about Greece for a second. If Greece exits the euro, the EU has apparently looked into shutting down automatic teller machines, closing borders, and other capital control measures. Your thoughts?
Listen, what's better than Greece giving somebody a 50% haircut for their bonds? 100% haircut, and they go back to the drachma. And already we saw this bailout with Spain, and they got loaned another 100 billion euros. They have a debt problem. They're loaning them more debt. So they're on fire. Here's some more gasoline. And and what did Ireland say? Hey, we want the same deal that Spain got. And I just think it's a daisy chain of an epiphany in that, listen, you guys are over there in the European Union. Your press is much better than ours, and Iceland is becoming a story of, hey, here's how you do it right. And yes, this was painful, but we didn't pay back most of this money. We put bankers in jail, and hey, our economy's doing better. And if you take a look at, and yes, there's going to be pain, but I think that when Greece leaves, it's like, I grew up on a farm in Missouri, and the hardest thing about taking care of your cattle was to get the first cow to go into the barn so you could spray them or do whatever you need to do to them, right? And so once Greece walks through that door, all the other ones are going to follow. I think it's a daisy chain of default, and they're going to say enough of the bonds. We can do a lot better off by not being saddled with all this debt. Thanks for the loans. We're done. And I think it's going to break up. There's no way you can have the United States of Europe. I just don't think you're going to have that anytime, in our lifetimes. At least not now with the way they've bungled this whole thing. They messed it up from the beginning. They allowed Greece to cheat to get into it's widely known that they cheated to get into the EU. All these countries were able to, live the high life and produce sovereign debt, and the banks gobble it up. And that'd be like, California producing all the sovereign debt they wanted to and spreading it out, throughout the United States. And that it's just not going to work out. So if Greece goes down, I think Spain, I think Italy, I think Ireland, everybody's going to say, hey, I think this is probably the way to do this. And my caveat with Italy has 2,400 tons of gold. And they got a technocrat banker in charge of Italy. And I would be surprised if there's not a play right now involved in trying to strip Italy of their gold, because after all, we gave you all this bailout money. And so I'd be very worried if I was the Italian people about losing their 2,400 tons of gold, which is what they're three in the world in terms of gold holdings. So Greece leaves, it's over. And that's why they're, a small, tiny country of Greece, 11 million people, about what is that? 0.5% of the world GDP, if that much. And they're so worried about Greece because they're the first cow that goes through the door. And if they go through the door, all the other ones follow.
All right, let's talk about the IMF, EU, and ECB are merely bodies of the individual member states, most of whom are bankrupt. Where is the IMF, ECB, and EU getting the alleged money to allegedly bail out the likes of Greece and Spain?
Well, of course, because of your treaty, the EU can't just print money. So that's why they opened up these dollar swap lines. And it's so funny. Ben Bernanke is in front of Congress last week and saying, you need to get your fiscal house in order. Of course, that'll never happen, at least not this year anyway. The market's going to force it, but it's not going to happen. The Democrats, Republicans, the Hatfields, the McCoys, they're going at each other. And so they don't want any movement whatsoever. And that's very dangerous, incidentally, but not just the United States, but to the world. But, Ben Bernanke opened up these swap lines, and I was watching CNBC, and a former Fed governor, revealed a little piece of information. And that was, they opened these swap lines up months ago. And if the ECB needs dollars, they can ask for them. And the Federal Reserve can print as much as they want. So Ben Bernanke's in front of the U.S. Congress. Not a word, not a question about, and by the way, you opened up these swap lines, several months back. Are you using them? And how much, if you have, how much are you using? I think the bailout is currently underway. The money printing is underway. I think the gold suppression game is, been well documented. They started out by telling everybody they're crazy, it's conspiracy theories. But the precious metals suppression is alive and well. I mean, I had an interview with Paul Craig Roberts, and he said, up until last year, they were just using the suppression game to kind of slow the ascent of precious metals. Well, now they're using it to knock it down. They knocked it down $300. And he thinks that because they're really getting vicious with the suppression of precious metals, that things must be getting pretty bad, pretty desperate in his words. And so I think you're going to see this come to a head between now and this time next year. Things are going to look totally different.
Greg Hunter, let's switch to the U.S. for a second. What about the U.S. debt situation? By some measures, isn't it worse than in Greece and Spain? And if so, will the markets ever care?
Yes, they will care. And, right now we're the world's reserve currency. Of course, this is a process. And, there's 12 trillion liquid dollar assets held outside the country. So everybody doesn't want to run to the exits and crash their assets. So they're trying to vent these off slowly. You just had China and Japan, the number 2 and the number 3 economy getting together saying, we're just going to change yuan and yen. We're not going to use the dollar anymore. That's huge. But there's a move underfoot not to use the dollar as the world's reserve currency. And, if things get bad enough, I mean, there's $12 trillion held outside the country. I know this is blasphemy, but hey, what's stopping if there is a shutdown of the Straits of Hormuz, a $200 a barrel, $300 a barrel spike in oil, a shutting of the U.S. dollar? What's stopping the U.S. from just saying, we're not going to pay those treasury debts? China, you're not going to get paid back. We're at war.
So, Greg Hunter, the Fed is readying a new round of stimulus. Will this latest in yet another line of stimulus help finally fix the problem with the U.S. economy, the so-called QE3? A lot of people have been waiting for it. It hasn't happened yet. Will this be the coup de grace that finally fixes the situation in the U.S., or just more of the same?
There's no way they're going to fix it, and they've already started. They in 2011 they talk about this official QE3. We had Operation Twist. We find out from the Wall Street Journal, which I can't believe they printed this, that 61% of the treasuries were bought by the Federal Reserve. What's that? We already have a deep trouble in the U.S. economy. Year over year, according to Keiser, housing prices are still going down. This is despite the fact we have record low mortgage interest rates, 3.6% for 30-year money. For 15-year mortgages, they're under 3%, and we're still having sequential year-over-year declines in the Keiser 20 market index. My question is this, and I ask this to people all the time that say, well, housing's at a bottom. Oh, really? Okay. So what happens when interest rates normalize? To your point, they're playing this suppression game. It's all about suppressing interest rates. Well, what happens when that game ends? And interest rates just go back to 6%. What's going to happen to housing prices? It's going to be another cliff dive. People who have thought, oh, wow, I'm at the bottom, or, oh, I bought a foreclosure. What a great price. I say, you bought a foreclosure, you bought the house at the new price. And so I don't think the economy for the U.S. is going to be fixed until we have a real crash. And they papered over this, so people are worried about Monday Night Football and baseball, and they're going to school with their kids, and the dollar's still worth something, and gasoline isn't all that expensive. Yeah, it hurts a little bit. But this is going to end, and it's going to end ugly, and nothing will be changed until we have a crash. And we had a crash in 2008, and that was softened by all this money printing, 16 trillion by the Federal Reserve, fanned out around the globe to soften this crash and stop it. It raised asset prices for stock investors, so that was pretty good. That stopped a lot of pain. But we really never had the crash, and we really never had a recovery. We just have one big, long, bottom-bouncing recession. So it's not going to fix the U.S. economy, more money printing. It's going to cause some inflation. The money is being wrapped at the bank and the monetary banks. The banks are so insolvent, they don't want to loan any money. And so it's not going to help the U.S. I just don't think. And I think it's has a good chance of getting out of control with some sort of black swan. And the military scenario could crush the world economy. Spiking oil prices would wreck an already very weak European Union, and it would certainly send the U.S. into a decided tailspin.
All right, Greg, let me ask you this. The Federal Reserve recently released a report highlighting the scale of wealth lost, mostly by the bottom 70% of the population. The median wealth dropped by 39% between 2007 and 2012. Why does the population seem not to care so much about their money being stolen?
Well, they care. You just don't hear from them. I mean, I was talking to Paul Craig Roberts, who is a former assistant Treasury Secretary. He also wrote for the Wall Street Journal. And I asked him, he said something very important. And he said, and it's something I caught because I was in the mainstream media as well. And of course, I told the truth. And I now have USAWatchdog.com. And so I asked him, I said, you said that your friends, the people that you used to work with and know in high circles, they don't talk to you much anymore. And he basically said, well, I told the truth. And he said, I used to write for the Wall Street Journal, and I can't get an article published on the Wall Street Journal anymore because, the mainstream media over here, and I got to hand it to the foreign press. I don't know what you think of it, but from a guy who does journalism, I get most of my really good material from the foreign press. And he just said that, the media over here is, as Gerald Celente says, a bunch of prostitutes. And, my theory on that is they don't really tell you not to say the truth. They just make sure they keep on the people who won't. I mean, you have the White House press corps, and they can't stand up and say, excuse me, Mr. Obama, what do you mean by saying that nobody did anything wrong in the financial crisis? I mean, 1,000 people went to jail in the savings and loan crisis, in the wake of that in the 90s, and not a single big banker went to jail. They did a big pass recently on Lehman Brothers. And my theory is the reason why is because they don't want Dick Fold getting up and saying, well, we did the same thing JP Morgan Chase does. We do the same thing Goldman Sachs does. And I think they're afraid of bringing the nasty, ugly skeletons out of the closet. So they went, yeah, we're not going to prosecute Lehman Brothers. And they're not, certainly don't look like they're going to prosecute the shenanigans and the malfeasance and what some people call outright theft of funds at MF Global. And so, a lot of people are in the dark, and they're in the dark because the press is doing a terrible job. They're corrupted.
So, Greg, you were one of the first journalists to expose mortgage and foreclosure fraud. Are you surprised that no criminal charges have been made?
Well, the answer to that is yes and no. And yes, because, listen, they sold liar loans. They packaged liar loans into securities that they said were equal to a treasury. They turned toxic. They had ratings fraud. They rated them AAA when they were indeed not. When it all blew up, they had foreclosure fraud, which they called robo-signing. And robo-signing was, in fact, a forgery and perjury and fraud on the court. And what they did was they had a $25 billion settlement, which is a pittance to what you were talking about, 40% of Americans' wealth, and the lower, 75% has vanished. So trillions of dollars of losses, and no doubt trillions of dollars in fraud, and all these, securities fraud, mortgage fraud, ratings fraud, application fraud. Not a single person in the high-ranking financial elites has gone to jail. Angelo Mazzillo at Countrywide paid a $67 million fine. Hear any more from him? No. So yes, I'm surprised because the crimes were mammoth. They were absolutely astronomical, unparalleled in human history. And no, because these people have control of the government here in the United States, and apparently they have control of much of the government in Europe.
All right, now Attorney General Eric Schneiderman is under pressure from the progressive bloggers about his capitulation to Obama's $25 billion deal. But in general, the population doesn't seem particularly bothered by this sort of corruption. Your thoughts on Obama's deal?
With the settlement? Well, it's because the media doesn't do a very good job of speaking out against it. People who do lose their jobs. They don't need them anymore. They don't renew their contracts. And I think that it's, corporate America runs the media. I think most people are in the dark, not just because they don't care, because the media is supposed to be the watchdog. They're supposed to get out there and ask, hard questions and stand up at the White House press corps and say, whoa, hey, wait a minute. What about all this fraud? I mean, there's known fraud and verifiable, public documented cases of fraud. I was listening to the guy, the producer that did Inside Job, and he said, listen, even when it came down to Sarbanes-Oxley, these guys were saying their balance sheets were accurate, and what they were putting out to shareholders and to people, investors in the company, that everything was accurate, and indeed it was not. They went bankrupt. And there's documentation, whistleblowers that have come forward, and not a single case. So most of it is because of the press. The press is, the mainstream press, I should say, is totally corrupted. And I was, for example, and this is another great example, in Greensboro, North Carolina, they had the John Edwards trial. Okay. Now, here's a guy who is a supreme weasel. However, they go after him, and I'm talking to one of the top reporters at ABC that I know. And I said, you know, I don't believe this. This guy's got $1 million of what they claim is some sort of campaign malfeasance for hiding a girlfriend. Yes, he's a weasel. But we had trillions of dollars in losses and trillions of dollars in fraud, and nothing was done on that. And I'm telling you, in Greensboro, you would think you were in downtown New York.
Greg, unbelievably, the same Ponzi housing bubble which destroyed 40% of Americans' wealth is happening on an even bigger scale in Canada. What happens when that inevitably collapses? Canada is America's #1 export market, with nearly 20% of exports going there.
Listen, the entire global, this is the problem that is unparalleled in human history. And the problems are global. And even countries with rich in natural resources, Canada, minerals, oils, things like that, they got over leveraged as well. And this is going to be a big, fat, giant reset. And anybody, the good thing about Canada is they have wealth in the ground. They have minerals, they have oil. They'll come back. The good thing about Canada is they have that. But, you know, countries around the world are going to feel this. You know, ultimately, this is going to be a collapse of the buying power of the U.S. dollar and a collapse of the dollar as the world reserve currency. And this is a global phenomenon. And this is going to be a flight to the real quality, and that's going to be gold. And that's why in the paper market, they're suppressing it, and you're seeing the price get knocked down from 1,900 to 1,600, I think, around right now. And but no physical holders of gold are selling it. Not even the central banks. They're all buying it. And the reason why is because we're all going to go to they're all going to run to gold to at least preserve their assets. I don't know if we'll have a gold standard ever again, but gold is going to be a great way to preserve assets. It's a global phenomenon, not just for Canada, but for the entire world. Everybody is over leveraged.
All right, Greg Hunter, that's it. We're out of time. Thanks so much for being on the edge.
Thank you for having me.
Okay, and that's going to do it for this edition of On the Edge with me, Max Keiser, and Greg Hunter. If you want to send me an email, please do so at ontheedge@presstv.com. Until next time, Max Keiser saying bye, y'all.